All right, let's jump into it. 10:04, 28th of May. So coming right into the tail end of this month now, pretty quickly. Look, let's start off with a little bit of overnight data. So a couple of bits of note, well, pretty much the only sort of bits of note in that, with the durable goods orders and also the consumer confidence coming out of the US. Both of which are somewhat positive for US dollar. So durable goods, I made a note of this yesterday. Being that it was sort of like, like you look at 7.5, 7.6, okay, you gloss over the fact that this is a positive and this is actually a negative number. So I think sort of if you look at sort of previous sort of months and that, it actually had this sort of like really sort of out there sort of swing. Maybe due to some of these sort of like sort of tariff situations and all these kind of things, people trying to sort of get ahead of implementation of some of the tariffs. That's the only thing I could think off the top of my head that would cause such this sort of out there swing. It's too early, maybe another coffee. But as you can see, typically you're sort of sitting, 1 to 3% sort of band plus minus kind of thing, and then you've got 9.2% gets revised back down to 7.5%. But obviously, that leads it to be quite a large sort of correction. So if you think about it, if you're sort of ticking along at 1 or 2%, all of a sudden you've come out here at sort of 9% or 9%, and then obviously revised down to 7%. A drop off of this down 6% of that sort of means that you're back into that 1 2% band kind of thing. So although this is a drastic drop number to the bottom side as a negative, like a 15% swing, kind of between what it actually was revised down to and what it was revised down to and what their expectations were. It's actually, if you take it in a step back in a broader picture, it's actually not too bad. And even as it is with these sort of things that, they're expecting minus net 7.6%, came in at negative 6.3%. It's kind of like when companies are expecting sort of some bad earnings or something, and then they're bad, but they're not as bad. So market's priced for this, comes in at this, even though it's a negative, it's actually seen as a positive. And on top of that, you take a step back, it's actually not too far off. Like, I mean, you had a massive upswing 1 month and then a bit of basically correction in that number there as well. So that was the explanation of this being such a drastic sort of swing and push with the numbers. The other sort of number was the consumer confidence. And as you can see, this is expected to tick up here a little bit. It actually came in quite strong. There's three bits of data actually sort of dollar positive, which I've been sort of saying this for a while that sort of like these are the little bits that, really the US needs to sort of regain, like for lack of anything else, some confidence in their market because, they've just been absolutely shattered. And we've seen sort of flight of capital from everywhere. I actually did a video and I've titled the video like, I don't know, maybe March or something, I think it was, saying sort of like flight of capital from the US. And that's what we saw. Obviously, sort of equity markets are pumping back at the moment. They're loving all the sort of the I'd say delays on the tariffs, but it's kind of like they weren't implemented, so it's not really a tariff. Walk back is probably a better term to use with it all because, of course, that's been the big sort of driver, at least over the weekend and early this week was, Friday. Trump sort of, I'm going to put 50% tariffs on over the weekend. Actually, hold on, mate, we'll put it back or we'll hold off. Then, I think last night or the night before, so he will push it back again. And so the market has sort of taken this as a hold on, wait, let's accelerate, accelerate, accelerate. So, I don't really cover equity markets a great deal on here, but obviously I'm very well aware of sort of what's going on with these things. And, these things are just hammering back from those lows. And even the sort of sell-off that we saw on Friday night, they've really sort of pushed back at the moment. So just to emphasize the point a little bit, you can see here, this is on the 4 hour. This is where Trump sort of said, hey, we're going to push off the 50%. We're going to put a 50% tariff on the EU. Within a couple of hours, bang, they're back above it, wobbling around, and they're still moving up there. Almost looks like a little bit of an inverted head and shoulders with this one, actually. Sort of thing. has sort of affected through here, which means there's probably still a little bit to go. As I said, I do these for the inverted head and shoulders. I don't take the wicks. I think it's better to be on the safe side than it is to sort of try and squeeze out the extra couple of pennies. But regardless of it all, it means you still probably, and that looks like it's taking you kind of back up towards your resistance levels that we saw probably only just last week or so. But certainly, as you can see, it's coming down and moving back up. So I wouldn't be surprised if we still see a little bit more upside in this move coming here with equity markets. As I said, I don't really cover this, so I won't spend too much time on it. But the point is that if this is going to move up here a little bit higher, and this is, remember, the conservative side, because I'm only sort of taking neckline to the body fills of the head, not even with the wick. So if you take it with the wick, that takes you up here a little bit higher. So as I said, I go for the conservative, lines up a little bit better there as well. But point being is there could potentially be another little bit of an upsize move with this here, which obviously is going to affect risk appetites across the market. And that's the only thing that I'll really sort of say about this at the moment, that this looks like it could sort of grind back up, only another 40 points or so, but certainly the recovery has just been insane. So we'll see how we go with this one. Anyway, on to more pressing sort of things, DXY. So this was a decent little trade we had yesterday. Just want to update a few of these. I found a nice little channel that it had been respecting. No, none of these. So this one's back. Obviously, so I do these charts and everything live. Well, live, recorded kind of thing. I'm just sort of, I don't do a plan. I just sort of see if we can see if anything else we can work with. Look, I'm not a big fan of this line, but we will hold it just for now, just to sort of see if we can see any sort of shift in patterns here. Anyway, on to what's happening. So look, recovery was quite good yesterday. This was the little double bottom we sort of covered. This little move down here. This is, did the body fill, which I covered as it was happening, and then shot back up to the top side here. So this isn't a full sort of what's called a high heel bottom, because it'll be more of a drift up and then a shoot down. But the point is still the same. When you have these sort of moves here, where obviously, we've got our three legs that we're trying to sort of ascertain where they are. You down, support, resistance. This one here. This is the one that I always talk about. So you're either going to get high, low, double bottom, lower, low. They're the three outcomes you can see. And then sort of obviously lower, low, continuation, double bottom, you're in the chance of having a range. Higher, low puts you in the higher chance of reversal. Now, we actually got, I guess technically it is a higher low than the wicks, but basically what I'm sort of getting at with this is these little moves here, where it's this touchdown and then springboard back up and takes out the high. This is where it is similar to the high heel bottom. That as it closes up out the top here, that's your go ticket. That's okay, sweet. You've seen fast reaction from a rejection of a continuation, and it's shot back up the other side. And this was quite a strong move. We saw a nice sort of continuation through the rest of the session. So just coming into Asia Open now, and obviously sort of things sort of starting to grind and slow out here a little bit. Doesn't mean that this move's done, but you could definitely see this sort of maybe pulling back a little bit here, maybe trying to sort of regain and hold this sort of little support area that we've seen the market has liked to buy it up from these areas previously. So two sort of levels that I'm sort of looking at is, one is this immediate one. If they take it from the immediate one, meaning is in they only sell it down 2 seconds and then they push it up, either of these sort of things above the highs is the continuation, obviously, and then we're probably looking back up around 90, 99.5, probably up around the body fill of this big move down here. I wouldn't be surprised if we do get a fill up over here. So two areas that I'm kind of looking at is if we get this immediate little drop down like this and then push up. The other one sort of being to sort of come down to this larger kind of sort of support area and seeing a bit of a drive up there. This is the larger, higher time frame structure that we want to sort of see if they can sort of regain, because this, of course, was that sort of last little sort of pivot point to get that springboard to come back up to, which got us to the major resistance, which sold us down. So structurally, this is an important level. If you can sort of regain hold above 99.2, so again, if you want to play things on a more conservative side, that's the area that you look for, 99.2, and then push up. Most likely, you're not going to get a springboard straight up here, just from the way that the candles work. Like there's a good analogy I heard a while ago, sort of like if you think about it like a ball, you throw a ball in the air, it's got all the speed as it goes up, it goes up, it goes up, and as it gets to its very pinnacle, there's actually a point where it's just actually stopped in the air. And you can see it like this with the candles. They get smaller, 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 and then as they sort of come back, as the ball comes back down to earth, the candles get bigger and they accelerate kind of thing. So it's similar here. You can see it sort of coming up, small candle, small candle, small candle. Most likely you're going to get a pushback down here. Then you want to see the buyers step back up. You want to see them reclaim this 99.2 level. That'll sort of trap some people down in these lower areas. You'll see the bid move up and we can see it push again because we know DXY is not shy of deep pullbacks. 78% of this whole bounce move here, that's where it found support. There's another chart that I actually put up a couple of weeks ago on X. As I said, I don't do Elliott wave sort of stuff. Which one was it? I can't remember. I've got too many of these charts. Possibly this one. Nope. This was it here. So this is a chart that I put up when we were around this zone over here. As I said, I don't typically do Elliott wave stuff. I get the theory of it, and yeah, it's nice and all, whatever. I just use it as another level of confirmation because the thing is, although I don't use this particular type of trading, it is a very valid method that people use for their analysis. And, if you can line up a bunch of these things together, well, that's what your kind of confluences are. And if you've got a portion of the market that are Elliott wave aficionados, and that's how they're trading things and moving things, and this is what they see, if that lines up with your analysis and you're doing, support resistance, channels, fibs, whatever, it's just like, well, if you've got a whole bunch of people that are all going, hey, I'm waiting till it gets to this point, then I'm going to buy it or sell it or whatever. That's just extra confirmation because there's even more of the section of the market that's looking at that point. So anyway, what I was saying with this is, we had the 5 waves down here, and I was around this point here, and I said, look, this is a potential to come up, bang, bang. That's fine. Look, we saw the sell down here. It's not a shocker. It's starting to move up here. On the weekend, I said, look, you know what? If closed bearish, closed ugly, but it was unable to break through. So again, if you look at the style that I do, you got your support, resistance. This is the leg that we're in at the moment. And it went and stopped. It didn't close like this. And I said last week, I put a post out on the X, and I said, look, 98.8 is where it needs to hold. And as you can see, that's where it's held so far. The week's not done. We're only sort of only kind of halfway through. But as you can see, failure to break through has left it with a bit of a double bottom kind of scenario. Not a true double bottom because this is the low down here. But it's the same thing that we saw that I showed 2 seconds ago with the lower time frame with DXY. That was also technically a higher low kind of thing if you include the wicks, but came down, touched the bottom, and now it's trying to push back up. So a continued push on DXY this week could be leading to a medium-term bottom. I think what you really got to get above is this high over here. And in this case, I will take the wick. I mean, look, you could say here and sort of say, a close of the week above 103, but really confirmation is going to be above 102. Above 102, this is going to move a bit higher. We're going to see, okay, this is a bottom. We've got the channel, break of the channel, test of the top side of the channel. That's another sort of way that we sort of trade these things. And then moving up. So I was talking about yesterday about sort of like larger price targets. And till you get a higher time frame base of DXY, you don't look for the higher time frame targets because, This is on a weekly chart. This isn't it. I mean, purely just with the time with the time frame, it's a weekly chart. It's not intraday session stuff. But you work from this idea, and then you drill down into your lower time frames, and you go, look, should I be? Let's get onto the chart that we get. The lower time frames. Should I be buying the dips on these things? Should I be selling the rips? That kind of sort of stuff. So, we know the levels that it's got to beat on the higher time frame, and that's why it's important to do the weekend analysis, because with the weekend analysis, you can then sort of go, okay, well, did it close where it needed to? Are we going to see this thing sort of just yet again roll over? Because all in all, it's an incredibly bearish kind of thing, and this is on lower time frame here, but a little bit bullish here, bullish bounce, pulling back, yada yada. Okay, anyway, whatever. So point is, look, it is putting in an effort off a high time frame area that we expected it to bounce from. We've got a bit of a bounce. Question is it going to continue? Alert above the highs of last night. Continuation. 99.6. That's continuation for us. Short chance it could sort of bounce from this early point here. I think if this breaks down here, I mean, would be a nice little, retest of these levels. So there is a reason. I mean, there is a potential that you may see this thing sort of bounce from this area here, but it's not all over if it fails under 99.4. We look down at 99.2. If you fail underneath 99.2, yeah, it's kind of like maybe that's it. That was the bounce, and that's all she wrote. But we'll see how we go. As I said, it had a little bit of sort of positive data, so there is some sort of backing to sort of say, hey, hold on, wait, maybe this could go a little bit higher. It's not all just complete sort of rubbish numbers and that at the moment. One sort of correlation I've definitely seem to have picked out at the moment is that equity markets and US dollar seem to be running in sync. So traditionally, they'll run inverse to each other. I mean, if you think about a very simplistic sort of thing, I sell my stocks, I turn it to cash, demand for cash goes up, US dollar goes up. That's what they're selling. But we've seen more so the last couple of months, that correlation very much goes skewed. And that's the thing, these things happen. And I think that's definitely another area where a lot of money can be sort of made, is being able to pick out correlations and be able to pick out when they swap and when they change. Because that's the thing that sort of people go, oh, I've got a method, I've got a style. And there is certain broader kind of methods to sort of trading that, are kind of universal and will always have a pretty good response on that. But particularly if you're using correlations for stuff, in terms of timings or where things should move, which is a lot of what I talk about, cross-chart confluences. You need to be able to pick out when these things are changing. And the quicker you're onto it, the quicker you can make money from it. The slower you are, well, the more you're going to get hit, because these things are going to, you're going to be like, well, this is moving this way, it should be moving this way, but it's not the case. Equity markets are going down, US dollars should be going up, or vice versa. Not the case. They're both being sold off together. They're both kind of recovering together. Obviously, equity markets sort of outperforming US dollar a little bit there. But anyway, so above 99.6, we look for continuation. Downsides, I'm looking for buyers to step in around this sort of 99.4 kind of area, 99.23, this kind of area down here for a little bit more of a high chance, I'd say, to see a bounce from here from this sort of higher time frame structural point. Move along, we got Aussie, because we've got CPI coming out just over an hour. So I got a very good rejection from this. I'm looking short side, good rejection from this 65 zone here, and really it hasn't really sort of been doing a great deal on the way down. Well, it held a couple of points. Top side of this triangle, it gave it a little bit of a thought kind of thing, bounced a little bit, dropped down here. I said yesterday, sort of 64.6 is where I wanted to sort of see confirmation was going lower. And it's funny, it's very important where you set these alerts, because I set the alert at 64.61 and the alert goes off, continuation, and of course what do they do 2 seconds later? They rip it right back up sort of 25 points and then smack it back down. And again, look, these are why it's important to watch these things and only trade a few things and pick out the nuances with this, because That's a confirmation line. I've said it a couple of times, and that the 60s is a level that shows up time and time again with Aussie. Same with the 90s. So if you're hitting the 60s, you take some partials. Hitting 90s, take some partials. If you want to give it a shot to sort of trade against the trend with these things, they're good entry levels. It's important to know these things. But the point is that sort of like, 60s, we know it's a level. It hit here and then ripped back up, took out all these potential shorts. If you look at where these highs are here, you know what I mean? Like if you're sort of trading your textbook and you're like, well, here's the last highs, and textbook said put it above all the highs, and this is on a 30-minute, put it on a 1 hour. I've hit that level, 60s, and I've 1, 2, 3, 4 hours. I'll put my stops above the 4 hour. Well, what does it do? Comes up, takes out the stops, and then runs it back down. You know what I mean? The thing is, there's somebody else on the other end of these trades, and they know how to take the easy money. Put a little trend in here. So, you know what I mean? It's not a surprise that sort of like came up here, clipped this stuff, and then came down, particularly with Aussie. It's a bit of a tricky sort of one to trade at times. But point is, it was coming down, broke through this level, worked out quite well. Back into this kind of range over here. Look, obviously it's finding a little bit of buying off this US dollar weakness early in Asia. We got CPI coming out in an hour or so. Expectation is down one tick. That's right, I didn't even cover that was just overnight data. So coming out today, we got CPI down one tick. So obviously, if it does come in a little bit cooler, well, there's less sort of incentive for them to sort of hold rates higher, more in the sort of like cutting camp, a bit more on the dovish side of things. That's obviously going to sort of weigh on Aussie a little bit. Inversely, if it comes in a bit higher, well, you might see Aussie recover a little bit of that sort of drop down yesterday. But as I cover with Aussie, it really comes down to what the market's doing with the US dollar. Like the local data will definitely impact it, but it'll only just it'll either exacerbate whatever the move is, i.e., if we get a sort of dovish move here plus US dollar, well, it's being sold, it's going to go down on US dollar being bought up, and then on top of that, you got more dovish stuff local, it's going to go down even further. So it's going to get hit double. If it's inverse to it all, and they're sort of like buying up US dollar, that'll push it down. If this comes in a little bit hot, it may not go down as far. So that's where it's sort of like important to understand there's the hierarchy of what drives, well, with any currency, but in this case with the Aussie. And Aussie obviously sort of, as I said, 2.3% is what they're looking for. So coming right down on the numbers there. But US dollar selling down, I think, is definitely the only particular reason that this is moving at the moment. Apart from that, we got RBNZ half an hour later. They're looking to sort of cut. They've come right down. I'm pretty sure if we have a look at where they've sort of been, they were up at 5.5%. They're looking to come down to 3.25% after this decision. So 25 base point cut here. So they've really sort of peeled it back at the moment. I actually saw something yesterday. I've got to sort of look a little bit more into it. But their housing market, I saw that some of the prices there are equivalent to pre-COVID. I have to sort of confirm this, but that's pretty crazy, and particularly since they've dropped so much in terms of their rates. We're sort of seeing, sort of 10, sort of like, 25 base point cuts and this kind of stuff in Australia, and everyone's like, oh, the housing market's going to explode and go to the next level, next level. I mean, look, in theory, in a very basic sort of breakdown analysis of it, yes, I mean, more people in the market, and I do believe that because most people are, you know, stupid. It's sort of like, oh, look, cash rate's gone down 25. Let's borrow even more. Can you afford it? Don't think about that. Got to pay it back? Oh, what? I've got to pay it back. Yeah, that's why so many people are crying because they're sort of like, the housing market's ridiculously expensive. They're borrowed to the hilt. They pay 1.4 for a pile of junk. And now they've got to, they've got to pay the piper. And they're like, oh my God, how can we do this? How can we do it? How can we pay this back? Well, maybe don't spend absolutely every cent that you can get your little mitts on. You know what I mean? Like, So anyway, I think that's it's a topic for another time, but I think that's kind of like, almost a self-correction of the market. You make some bad decisions in trading, well, you get a response. And if you make a bad decision with your house, well, unfortunately, there may be a sort of self-correction mode that sort of comes with a few of these people, which, I think is obviously overall healthy for the market. Anyway, whatever. The point is here is the FX. 25 base point cut we're looking at over here, and then obviously statement preference, press conference coming out 1 o'clock, so 1 hour after there. So we'll see how what they have to sort of say, how dovish they particularly come out. The only reason I really make more of a point of this is because we do tend to find these sort of things run together a little bit. So RBNZ and the RBA will kind of sort of have little impacts together. BOE and ECB, they will run together. Well, not run together, but slightly impact each other. Same with the BOC and the Fed. So it's just worth sort of noting and sort of seeing how dovish they sort of are, because it's on our part of the world, from our part of the world. Short of that, that's about it through the thing, which are two large bits of data anyway, so that's enough for a Asia session. Moving through, you got Euro, looks pretty quiet, and then a little bit of US data coming out. Manufacturing numbers still looking pretty weak over there, but slightly improving. So, watch to see how these numbers come out. All these bits of US data, like I was covering before, with like the sort of the confidence, durable goods, they're not your sort of top tier bits of data, but they are little parts of the puzzle to plug in. And if we start to see a couple of these smaller bits all sort of looking and turning positive, most likely you'll see some of the larger bits potentially turn a little bit positive as well. Better manufacturing, and that will, that may obviously sort of be in turn with more jobs being created, and they are the bigger pellets of the data. So these smaller bits here, they're not, you're not going to see the whole market turn around because Richmond manufacturing numbers are up, but it's certainly something you can plug in there. FOMC minutes, I think we pretty much heard everything they've got to say at the moment. We'll see how this impacts, and that's 4 a.m. We'll see what happens when you're sort of up and about in the morning to sort of see how that reacts, because we hear a lot of these people talking a lot. That Bassett dude, geez, this guy's harping on every second day, and he's got market moving stuff. Substance is probably not much, but he's still got market moving stuff with his commentary. So all right, and that's about it. And a bunch of bank holidays tomorrow, but we'll get to that then. So let's flip back across. So we got Aussie, obviously, this little downtrend channel sort of coming back towards this little area that we were kind of sort of picking out, sort of this previous sort of bottom side of the triangle. I think, look, the fact that it's, again, I said this yesterday, that it's come up above 65, rejected yet again, it puts the risk and the thoughts back down onto this side down over here. So this is obviously that little driver that I was saying before. So if we get these three things ticking, so we got the one pushing up a little bit, potential sort of, dovish, but potential cooling in CPI, and US dollar, as it is at the moment, is obviously sort of, pushing it down. But should that break, pushing it up, sorry. This is my point. You've still got these two bits moving here. This is selling off a little bit. Aussies moves up a little bit. If we do see US dollar push over this way, we're very close to having a sort of the trifecta here. I'll get to the one as well to cover that in the moment, because that's coming back up and sort of testing a sort of resistance level. But should that break higher, we could see this play out. And how we apply this with the chart is, okay, we sort of look at where is the market sort of valued this thing previously. So we've got a little support area running through here. Yeah, they came in a little bit higher through here. So obviously you want to take out overnight lows at 34. But I think underneath sort of 20, 23, 20, this kind of thing, I think this is an area that's certainly worth watching. So breaking the triangle supports and the horizontal supports. Because if you're trading this little triangle through here, you're bounced, you've bounced, you've bounced. This is where you want to see what happens to it, because this is an area where you can see they're progressing up. And again, if you break that structure, you're coming down. Doesn't mean that's the death blow to you, but it certainly puts it on warning. Same with the horizontal here. We can see that obviously it's been, support, resistance, support, resistance. This is an important area down here, hence why we sort of had this as the sort of like little target for it yesterday. I think sort of if you break through 64.20, realistically, you're probably looking down at sort of 63.90. And I think this is the crucial area for it. If it breaks 63.90, I think you've got your failed breakout up here, which has gathered a lot of momentum. You've seen the buyers are not standing in its way. That's the area that you're going to get a bit more of a move down, in my opinion. So they're the two levels that I'm sort of looking at through this session. 64.20 and then sort of 63.90. If we go through that, I think that's going to open up for a bigger move to the downside. Look, as it is right now, obviously it's found support, it's pushing up. This little sort of kind of channel that it's working with, they're trying to move it up here. So look, this could definitely still sort of come up to the top side. It doesn't mean the game's over for it. We've seen it be smacked in the nose. It's back down into its sort of range. We've seen this happen before. You know what I mean? And it's still recovered. It's still in the whole scheme of things right up along the highs. It's just that every attempt to break higher, it's getting whacked on the nose. So I think it needs, probably a hot CPI. We need a failed, that little rally in the US dollar. We need that to be a failure. And then that could be getting it back up here. So top side back above sort of say 70, 75. I just call it recovery, but put a little alert there. And I think they're your kind of two direction sort of things here, because that is obviously quite a strong resistance here. It played its part, went through, played its part, pushed back down. I think if you get up here, that's probably an area that you probably see a little bit of a sell down. Even if this thing can sort of rally a little bit here, I would say that's probably, you're going to see some sort of little sell down. That would be top side of this triangle yet again, this horizontal yet again. It's obviously played its part, like it's been a sort of resistance, it's been supports, support again, resistance again. Most likely, you're going to see the market react at this point here, and this is the thing, you need to be able to isolate and identify where are those points. You don't want to be the person buying or selling into these sort of resistance areas. Well, you don't want to be buying into a resistance but selling into a support. So yeah, I think any sort of top side, it will, find some sellers in the mid 60s again. But if you could break above that, if we could see an absence of sellers here and you get above, say, 75, we'll take, kind of 85, you're still going to run into some resistance areas. But if you can get above sort of 75, then you've got a chance to sort of play back up over here. But I think for the time being, the fact that it got rejected from above 65 puts it in a sell mode. We've got CPI potentially coming in a bit cooler. We have US dollar potentially running a little bit. I think things favour a bit more downside for Aussie, and hence why the levels I'm looking at are 64.20s and 63.90. Move along, we've got gold. So gold's trading very well. It's respecting the chart. This is what we've been looking at. So a couple of things with gold. Obviously came up rejected. This is the area that I said I've been looking at, the 3360s. Came up here, tipped into these things, sold down beautifully. Last two sessions, it's been respecting the levels, bounce, respecting the levels, bounce. But I mean, these are what we were kind of looking for. And again, it's about identifying where are we going to see some reaction. This is the area that we said we were going to see reaction from 3320s. And what happened as it came down into it? Well, it rallied, it bounced. And it bounced from 24 up to 50, so $25 bounce. So if you look at this and say, okay, look, I'll move this out of the way for now because this is where the buyers were. This is where the buyers were. We saw it move back up. Said yesterday in a thing, underneath 33.20, so this is a good example of it, absence of buyers here. Broke through, retest, and bang, went down. So you kind of look, where are the buyers been underneath this area? Well, it's obviously been down this area over here, 3280s. That's your target. That's what we got to. We've seen buyers hit it here before. You see it on the way up. We saw it a couple of times here before it shot right up to the top side there. Comes back down. What does it do? Buyers come in. Buyers come in, shorts take profits, whichever way you want to look at it. Let's see what happens if we put this across there. And obviously it moves up here with it all. So similar now, this level here becomes equivalent to this level here. Buyers, buyers, and then break. Buyers, buyers. You look for your break there. That's the trade if you're looking downside here. So, you know, I mean, it's there's a reason behind it moving up here. It's not like, okay, boom, it's come in high, low, whatever. This is a structural level. We've seen it sort of play its part. It's playing its part again. There's a little bit of a zone through here, so I'd be interested to see what it can do around the sort of 13, 14 area. You know what I mean? We could sort of just power through. It could roll over from here. But again, I'm looking for more of a downside move, and I'm looking for sort of underneath 3280. I think 3280 is going to be quite a big level as well, because as you can see, it got tested a few times. And even last week, I was saying, okay, it needs underneath 3280. I think it got like $2 under or something, and obviously quickly rejected back up. So this is going to be a very strong level. It means they're going to protect it a little bit, and which you can see they obviously have here. They held it, if you put this on a 4 hour, it's about 16 hours or so. Well, kind of more or less 16 hours, 8 hours here. They've kind of held this area through here, and now they're pushing back up. It's oversold, pushing back up here. That's fine. You can expect a little bit of a bounce and profit taking from this zone here. Above here, look, it'd be interesting to see what happens if it gets up to the 20s. As I said, we've got a small little zone here at the 12, 13 level. You know, DXY is kind of trying to hold. You know, you don't want to be too early with it all, but you know, we see DXY is sort of holding that sort of upper level off the bat. So should this thing reject from here? Well, again, it's the same sort of thing. You know, you tap, tap, tap. If you start going tap, tap, tap along here, as in another, if this, say this rejects from here, comes down here, you might get another little bounce, but that'll be the time. You probably break through. That's how you get through there. So it's just about working out sort of what you're going to sort of do with the thing. This doesn't mean this is the top here. This could, I mean, look, it could come all the way back up over here. I mean, you got to be prepared, particularly with gold at the moment. Gold is just an absolute beast when it wants to be. But it does seem like, you know, we see a reasonable area for this thing to be rejecting. It is holding where it wants to hold, or it needs to hold. I think underneath here, you could see a fairly decent sort of move. And because there's going to be a fairly decent move associated with the break of a zone, there's a good chance that they're going to protect it a fair bit. So you're probably not going to get, well, as you said, as you saw, you didn't get a breakthrough here. Even if you come back down into it again, they're going to try and hold it again. But it means that should you get the breakthrough underneath here, that could be your major break. Breaking medium-term zone underneath those 80s. Oh, I've got to pay more for my alerts. Oy, oy. Find some alerts I can sort of turn off. Well, all right, there we go. So that's where we're sort of looking, sort of downside. It's overbought in the 1 hour. As you saw, it's oversold in the 4 hour. So it's a bit of conflicting sort of movements there, but we're coming into a little bit of a zone above here. 24 is going to be a stronger zone. And then, as I said, my focus is still on the 80s. See what the market does there. Flip along, we got silver. So silver, this is what I was saying yesterday, 3 touches into this area here, and it yeah, got absolutely slapped yesterday. So what did we come down from yesterday's thing? We dropped another 2%. Obviously, it's recovering a little bit here. And this thing, I mean, look, the recoveries, they're very hard to put because typically you don't get a lot of V-shaped recoveries, but more recently, these markets have been very tough to trade because, you know, as I said, like the ball, big movements at the top, small, 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 small. This would lead you to the idea this is probably going to roll over and come back down. We're coming into a previous support area, bit of a resistance up here. For some reason, I've got this mark from all the way back over here. So it's obviously been a level at some stage with it all. We can see it being a support level here. We can see it being a little last second resistance here. I think this is most likely, it's over the 1 hour again, but looking like it may want to roll over here. But this is what I'm saying, that's sort of like, that's your typical sort of way you read this. It comes up, bunch of small little candles, well, boom, and roll over. But what we're seeing is it looks like this, and then jams up to the top side. So I'm not counting anything out at the moment. And as I said, I think sort of, they're punishing a lot of people that are too quick to trades. So, don't have to be the first one into the trade. But certainly, I think back underneath, say, 33.20s, we could sort of see this thing sort of roll over a little bit more. But that gives you a little bit of leeway, maybe 33.15 underneath there. Silver, I'm not a big fan of recently. It's just been a very, very hard trade. Unless you're going in and out for a couple of cents, it looks technically like it's doing something and then it does complete opposite. So it's a very tough read with silver at the moment. But I am ultimately looking a bit more downside based on the fact of US dollar strength. Move along, we've got copper. So copper got smacked. They tried to sort of hold vaguely this kind of area, but obviously boom, moving back down through here again as well. Almost like a very, very little sort of bear flag setting up here. This kind of thing could lead out to a little bit more downside, which takes you back into this major zone over here. As I said, the fact that these things ran so hard, and it seemed weird to me as to why this thing moved so hard off EU stuff. It was off US dollar weakness, which means US dollar is the driver, which means if we do get a push on US dollar, these things are going to unwind a little bit more. So I would, be cautious about buying this thing at this moment. Look, it got a big breakout attempt. If they wanted to run it, that's the time to run it. But there's no real fundamental reason for it. And whatever it ran off, which was the EU thing and the US dollar weakness, they've kind of undone that. And you're seeing the price undo as well. So I would say probably still some downside to come with copper. And finally, just with the one, so this is what I was saying over the weekend. We had this 3 drive down into the lows with a negative divergence. We're seeing this attempt to roll at the moment. I think this is going to be an important line. We've got the alert on this one here. You break above this falling resistance here. Yeah, you've got a horizontal here. It's actually into a previous back test of support here. So this thing could still roll over and go down lower. I mean, that would go with the theme of it all. But we're seeing a little bit of a triangle set up here. Negative divergence. 3 drive down. Potential for US dollar buying across the board. If this thing pops up and this alert goes off, I mean, really you want to get above 722. Above 722, I think that's your move. You've got the gap fill. Yeah, you've got a smaller sort of range here. But I think above 722, I'm looking at 727. This thing's going to block me from doing my alerts again. All right, so I'll go here. 727. I think that's potential for that there. I mean, it's had a lot of chances to break this thing down. It's obviously grinding, and as I said here, 3 drive, negative divergence, falling resistance, presuming it breaks over it, back up into this range. I think that could squeeze a little bit and give you that push up to there. And obviously that's going to weigh on Aussie, and it's going to sort of weigh on gold there a little bit as well. And that's just how we can apply those across to the other markets. Gold silver ratio, attempting to kind of break down a little bit, but again, not really much. It had this little channel, little test to the top side, little correction to the bottom side. Just a snoozer of a chart, really. So, yeah, waiting for some direction on these things here. All right, that's it for me.